Welcome to the London session on TopstepTV. It's Thursday, so this is the last London session for this week. We're going to be having a look at what happened overnight, but first, if you're here for the first time, my name is Deeyana Angelo. I've been trading for about 17 years, and 12 years out of that, I've been trading futures for various prop firms. I specialize in crude oil and gold mainly. However, every so often I like to pop my toe into equities, especially towards the end of the day. And recently I've been looking at Nikkei as something that is pretty lucrative for the London session. I think it moves a little bit better than some of the US-based equities. I'm going to explain the reasoning behind this trade. I've been in this trade since last night, so since like 1:30 a.m. That's around about the time when I usually go to bed. I am based in London, so I'm not based in the States, which is why I'm able to do these sessions. So basically, I was looking at some structures from the 4-hour chart following, of course, the FOMC rate decision. And we had tested this area of supply multiple times. And I have actually done some trades off the back of that. Some shorts, but now we broke through that and then kind of came back to that same area where I thought longs could take hold, and they did. So I'm probably going to stay in this for at least another couple of hours, just to kind of give it time to really develop. But the thinking is that now that we've had that FOMC rate decision, so we had a big rate cut, right? They cut by 50 basis points. And everybody was kind of expecting 25. So that's a big adjustment. And technically that's bullish for equities. This is why I want to be more equities focused for today. Even though in the coming weeks you might see a knock-on effect on crude oil. It should make crude oil cheaper, but that doesn't always pan out that way. However, certainly for the next sort of 3 days, I want to see equities go into a nice uptrend. I'm already seeing some abnormalities on ES where it's already reached the average daily range high and it's trying to go above that. So that is usually a sign of a high volatility day. So even though average daily ranges are usually reversal areas, in this case, I would actually be looking for them to be an indication of volatility, right? So bigger volatility day, that's what they are. And if they get ignored completely and we're just going to keep shooting higher, that tells you that it is the time to look for the trend day. So that is one of the ways where they can maximize the probabilities of a trend day happening, to have some sort of a catalyst where we need to reprice, and then it just kind of keeps going with that idea. My average daily high for ES is sitting at 57.50, right? So we're already above that. I then have another data point for the average session range for London, which is sitting at 57.70. So if we ignore that, it's definitely going to mean an abnormal day. So just look for any sort of pullback to, go in. Again, not a signal service, it's just how I like to do things. So if I see those sort of signs, I try not to go against them, right? Because that means you are in a trending day, and just going against that, it just doesn't really end well, right? But let me also talk through why I'm holding this for a more aggressive target on the Nikkei. If I go up to the weekly chart, and if we look at the volume profile, so we obviously had a demand area, right? We had, let me just maybe get rid of this. So we had this big demand area here, right? So it actually popped into a much larger area that we had like quite a while ago. It was like from last year. This is a weekly chart, so very, very large chart. And as you can see, we dipped into the edge of that, and I call the proximal edge of any demand area, I call it the conterminous line. That is part of my Marcus Stoker's method. Once you get a rejection from that, you can possibly run a swing trade in the opposite direction. So again, rejecting the demand, so we're going away from the demand, going into longs. And that's what I was waiting for. So the reversal from demand wasn't that strong, and then it sort of consolidated and created some minor supplies there that I was using for shorts. But then we kept knocking on them, and we just never really managed to gain any traction to the downside. And finally, yesterday, after the FOMC, we had a huge pop already at my London midnight, which is technically Asia open. But I like to use the time when I think it's officially Shanghai open, and that's when you have all of the Asian sessions active with the most volume. That's why I pick 1:30 a.m. for my particular entries. And I find that the levels that are done during that time of the night tend to be a little bit more accurate, and they can kind of hold through some parts of the day that are located in London and New York and stuff. So it's just like stronger levels with more volume, right? And that's all it is. It's just more volume that creates a level. It kind of makes up for a stronger level because you will take more energy, more orders to actually break through that. So that's the reasoning behind it. So if you see, this was a very thin area if you look at the volume profile here. And we have an area of balance up where this pretty aggressive target of mine is. I don't know whether we're going to reach that, but it's a swing that I'm looking at. So even if I just get like a chunk of that today, I can then carry on with that same idea. Upon a pullback overnight, again, plop in another trade and then work towards that target. So it's kind of like a swing in multiple parts, kind of like a series that has episodes. So episode 1, we get to this price, and then episode 2, we had a bit of drama, so we pull back, and then we carry on higher. So that's kind of how I look at swings intraday. So even though we have to be flat at the end of every day, there's a way to kind of run swings and stuff. So that's what I'm looking at. That is the idea. That's the premise of this move. That we have some balance area further up. You can even see that on the regular chart on the weekly, where you have a big sell-off, and you even see that on the daily chart. So it's all the same stuff, just in a slightly different time frame, different outlook, but it's the larger picture. So we have managed to go into a higher high, and now we're attempting to push to the next logical area, which would be up at 38,000, right? So yeah, nothing much more to say there. I suppose I can look at the profile for London right now. It's kind of, storming and ahhing around the initial balance high. Equities are turning bullish, so that's good. At some point, that's going to pull Nikkei up with it. I do have this level where we actually turned, like it's kind of scary how much these option flows are accurate. So what I do, I like to convert SPX levels into Nikkei, and then you look at where sort of things like gamma walls, call resistance, put supports, and all of that is. And I had a level up at 37,290. Now, I was asleep when that got reached, and to be honest, I didn't really think we are going to reach it that quickly. And it just turned around, like within, what's this, 10, 15 ticks, if that, 5 ticks. So that remains a level of interest that might be a little bit difficult to break today. So we'll see what happens. But for now, maybe just targeting maybe the top of that range. That would be nice. And then we'll see whether we get traction above it. Again, if we end up in an abnormal day, that's definitely something to consider as a swing trade. But I am bullish on equities today. I'm probably not going to be focusing much on crude oil. Crude oil is doing something that I don't really like to see, and that's being super active during Asia and during London, right? So look at it. It's just gone into this huge rally post-release, post-FOMC, overnight. Now, what that tends to do is that means that they kind of make all of their money already during Asia and London, and by the time NYMEX opened, it's just like a whole bunch of nothing. So for that reason, it looks like this is all just happened overnight without me. Wasn't even looking at crude oil. It is not something you see every single day in Asia, but it's been happening more and more. Today we do have some option expiries on crude oil because we have the new WTI options that expire on Tuesdays and Thursdays. So maybe that's what we're seeing here. Having said that, I still have some levels up at 71.50. We managed to turn around at yet another round number. So, crude oil doing the crude oil thing. But the only thing that I'm worried here today is that they're just going to do all the moves for like Asia and London. And it's not really going to leave much for NYMEX to do. And then what tends to happen is it just dies a death. Like it moves during the initial balance and then it just gets locked up in about 30, 40 ticks. And you're like, is my internet on? Like, what's happening? And that's not the norm, right? So we have seen that in the summertime, ever since these new options started trading. Is that behavior here to stay? I don't know. I mean, we've had some very good NYMEX sessions recently, so I think it's probably a bit of an oddity, but I am going to keep a note and keep a journal on how often this happens on Tuesdays and Thursdays, because if it always happens, let's say on a Thursday, that means that's the options putting additional liquidity into the market out of hours. And you have Brent crude oil that is traded heavily on the London Stock Exchange. That's Scottish oil that has a huge correlation with WTI, but not as much as, getting to average daily ranges and exhausting the entire 24-hour range. I mean, it could be the FOMC effect as well, of course. However, if that's the case, we should be going short, not long. So it's like, it just doesn't, some things from the macro picture don't quite add up, which makes me think that this is more a technical move. Now, another interesting point about where crude oil is turning around is that on the weekly chart, we actually have a weekly low from a few weeks back. So let me try and make this bigger somehow. So if I point out, now is this going to be the same? I'm not sure. But yeah, there is this area here, right? So that's the weekly low for one of the previous weeks. And we are kind of arriving in there. Obviously, it kind of overshoots sometimes, like whatever. But it's definitely an interesting thing that it's deciding to go all the way up to the previous week's, one of the previous week's lows. And now we're having some sellers stepping in. So, I just find that from a technical point of view, maybe that's where they were looking for more significant sellers. Because remember, in order to push something down, you have to have enough energy and power behind it. And they need to reach relevant supplies with enough liquidity to kind of execute their orders efficiently so that they're not doing like a million trades. And keeping, they need to keep the execution costs down. And that means you need some very good liquidity pools. So that's my theory for today, that's what they're doing. Again, may not work. We can all be very, very wrong a lot of the times. So we need to keep our egos in check there and just see what they want to do with this area. But yeah, I'm going to be mainly looking at equities today. I just wanted to touch base with crude oil, which is my main product. All right, so before we carry on, I do have some things that I want to talk to you about. So first of all, if you're liking what I'm doing here, if you find any value in what I'm saying, please click the like. And if you're new here, please click on subscribe as well. This is a great channel that offers a lot of educational content. We are a prop firm that has some great talent trading for it, and there's constantly new things to learn. So make sure that you click on the like. That engagement means a lot for the YouTube algorithm and to us, obviously. Now this week, we're gonna, is it gonna be this week? Let me see what date that is. Okay, that's next week. So next week, Tuesday, September the 24th, we're gonna have Brian Shannon coming back to TopstepTV. It's gonna be at 1 p.m. Central. He is the pioneer of the anchored VWAP. He wrote books. He's the guy to go to for anything VWAP related. So he is the wizard, the VWAP wizard. And so he's going to come on to discuss how he uses that indicator and how it's impacted his own trading. Now, if you want to see some behind the scenes footage from the recent gathering that TopstepTV crew went to do, like, a bit of fun and games, and, they just wanted a little bit of a break from working hard on this channel and everything that they do behind the scenes. So they went off on a little retreat. If you want to see behind the links what they got up to, and I'm guessing a lot of drinking, so it's going to be quite fun. I'm going to pop a link in the description. Not in the description. I'm going to pop a link in the chat, which I've just done. So check that out. Check out what the crew was up to. And we are also having a casting call, so we're looking for you. Yes, so we are looking for traders who want to come onto TopstepTV to trade with us and to share your story. It doesn't matter whether you're a beginner or you've been at this for 20 years. We want to hear from you, right? So for a chance to come and hang with us for a while and do some live trading, I'm going to drop the link so you can get your name in and get your shot to trade live with the crew. So that is the link going up right now. And now I'm going to be turning to the questions that we have, right? I can see El Kiko saying CL is reversing. Yes, CL is failing the auction. I know, but I'm already in a trade. I'm not going to be doing double trades here. That's just like sizing up too much, and basically having to track two active positions in the morning is kind of not what I'm keen on doing. I'm functional in the morning and I can talk, I can, seem like everything's fine. But some of the more complex cognitive functions, I'm definitely a night owl still. And I have to be mindful not to overdo things, because if I try and overdo things, then I will mess things up. There will be some Muppet moments. So I need to make sure that I'm not running multiple positions this early in the day. And it really doesn't matter. Like, I've tried to make myself into a morning person. It just doesn't work. I'm just a late chronotype through and through. My brain wakes up at 1 p.m. I've tried zapping myself. I've tried, going to bed super early. And it's just, my internal clock just doesn't like it. So even though I can do one trade, one analysis, overview of the markets, don't make me do double positions and try to track everything intraday, because that's going to end up going horribly wrong. All right, let's have a look at some questions. Marcus says, ES already retraced all of yesterday's downtrend overnight, probably making a new high from yesterday's FOMC. Do you think we might have a directional day to the upside? Don't know when you joined the stream, but yes, that was the premise of the first part of the stream. I do think we have a fairly good chance of a trend day. Now, looking at the weekly chart here, we do have some highs. No reaction so far to any supplies that we run into. So yes, there is a very good chance of a trending day. Very good chance. We keep knocking on the door of the highs and then making a new high, maybe stopping a little bit. Remember, this is an out of hour session for ES. And I'm definitely bullish on equities today. So if I see the trend day continuing to develop, I'm not going to fight it, right? I'm just going to keep going along with it. And that is kind of why I'm also in this Nikkei trade, because I'm bullish on equities, but I don't like the way ES moves during London. And I've been doing my overnight trades on Nikkei with quite some success. So, I don't have DAX just yet. Hopefully they bring that to us soon. DAX is making a nice move. Again, I want to keep focus on Topstep X, but I'm just going to flash the charts that I have on the other side very quickly. DAX is breaking out of the initial balance, right? So that will be the trade that I would be taking right now on DAX. And I actually had a buy stop order on my private account, so I am in that right now. Usually the DAX doesn't really need that much management. My next data point for DAX is 189.40 if you are trading that, because that is the average session range low. Alternatively, if we get to about 11 o'clock, so in about a couple of hours time or just over, there might be a chance for a fade. But I wouldn't be taking the fade actively, so I wouldn't be doing the selling. I would just be looking for any kind of pullbacks to get back in case I'm still there. So yeah, DAX is definitely moving. I mean, so is ES, but DAX tends to be a little bit kinder on the number of ticks that it tends to give us. Already, the session on DAX is 104 ticks. Whereas, ES is moving, it's 88 ticks, but, DAX is still a little bit more liquid there. So that's something to keep in mind. So hopefully, fingers crossed, we get DAX very soon. But until such time I'm kind of using Nikkei as a replacement for that, because I noticed that it moves pretty well for London. So yeah. All right, let's move on with the questions. I'm going to take a sip of coffee before we carry on. From my little Grogu Mandalorian mug. Choose your path, he says. Choose your path, yes. So choose the path of less Muppet today. Yarden Lapid says, "Hey Dee, I had a great day yesterday." Very good, great to hear. Finishing up $530 on my combine, and I caught the long on MES in slow market, so up $250 for today. I use the Asia high and low levels and ASR ADR levels. Oh, okay, that's nice to see that my ASR levels are catching on, because obviously now we have Coach Ray using them. I saw that even Hogue has started to pay attention to them, and obviously that's a nice thing to see. Nice thing to see. My only problem is that I don't know how to find those levels myself. I'm trading with Topstep. Do you have a recommendation on how to get those levels? Should I pay for it? Well, I'm a bit biased there because obviously I have a software development company, so I'm going to tell you to go and buy Blatek indicators. They do that for automatically for you, right? And that's literally the chart that I flashed up. That's what I have on there. The reason why I went into software development to develop those indicators in the first place was out of my own need. It wasn't like, let's make some massive business out of it. Like, obviously I am a business individual, so I will try to make business and monetize anything that can be monetized. But for that part of my business, it was one of those things where I'm a trader. I needed an automation for my average session ranges. I didn't want to spend, hours doing what I was doing up until that point, which is basically exporting the time series data, getting it into an Excel spreadsheet, averaging out the times of day for each regular trading session, and then plotting those lines by myself, right? So therefore, when I was in a position to, after like a few years of my trading career, I commissioned a software architect who was actually looking to get out of the city at that point. So he was like, yeah, what are you working on? So I kind of pitched him an idea. We were already friends. And I said to him, I kind of need this and I need that. Would that be possible? And it cost a lot of money. I'm not going to lie. It really wasn't going to, I wasn't going to cheap out on it. And back then you couldn't quite, like right now we have some remote teams that you can buy for, $15K. And they get you like amazing stuff. Back then you couldn't do that. There was no remote working. The technology wasn't there. This was like way long time ago, like 10, 11 years ago now. And it was just something that I wanted to have as a trader, and that's where Blatek indicators came out from, right? From my own need to automate and to not spend 3 hours exporting and, calculating things in an Excel spreadsheet. So the levels that you're referencing, they're exactly that, right? They are Blatek DR indicator, which we have on MetaTrader for now, but we are working to get it into Ninja. We're considering making it maybe free for Topstep as well. But again, I'm still kind of fighting the software team over that. So yeah, we'll see what happens there. But for now, they are only available for MetaTrader platforms. You have futures on AMP. AMP futures do MetaTrader with CQG data. CQG data is one of the most reliable data in the business. So, that's what I use for charting. And it's, it's very easy for me to find the average session range and daily range levels, because all I need to do is just look at the chart. Where are they? There's no exporting, there's no Excel spreadsheet nightmares and all of that. So to me, it's totally worth it, and it's not going to break the bank. It's not going to be like £500 or something. It's a fairly cheap indicator, right? It's not anything. It's one of our flagship indicators, but at the same time, it's not going to break the bank. So if you are open to, automating your process through that, that's what I use. Now, I don't really keep in touch with the pricing that Blatek has, because technically they're a different department than what I do. But I do think, so Blatek daily range for MetaTrader 5 is they're running it now for $34. I mean, come on, they do have some more expensive tools, Market Profile, but again, it's not extortionately expensive. Like Market Profile is $99, so it's like same thing. If you want to find value areas and stuff, that's what you're looking at. So it's a one-off charge. So, it's up to you. Obviously, it's totally up to you. But I have to tell you that I am biased, right? It's my company. Of course, we want to make more sales. So, it's like, should I get a tool? Yes, you should get a tool and not spend a million years trying to look at, finding the levels. So, yeah, for me, if you can justify it, if it's not an extortionate cost, absolutely, you need to get the tools that will make your life easier, right, as a trader. And if it makes you do less clicking and exporting and boring stuff, all the better, right? Days Prior Life says, if DAX becomes available on Topstep, any idea what platform we will need to execute on? Ninja, please. No, I don't think they're going to be on Ninja. It's going to be on Topstep. So I know that much, because that's one of the things that I've been in touch with Topstep development team. They are developing Topstep, right? Any kind of new products that they're going to add, if they do end up adding Eurex onto Rhythmic and stuff, that's a whole different connection and stuff. It's very expensive. But because they can get the Eurex data directly from the exchange itself, I know that MP has been talking to Eurex directors and stuff, and we are going to have the direct connection from CME, no kind of middleman, and that's actually better. So unfortunately, I don't think it's going to be available on Rhythmic. But don't quote me on that. Again, it's Patak's company, so I don't know what he plans for the European side of things. It would be nice if the European products are more represented, and if we can get Bund and Bobble and Shots and all of that in other platforms too. But for now, I think they're just going to be working to getting DAX and Eurex products into Topstep, unfortunately. So, but hey, better something than nothing, right? Sam Shaw says, do you think it's better to learn a generic programming language like Python for coding indicators, or platform-specific tools like PineScript? Honestly, PineScript to me is kind of like looking at an XML or something. It's so limited in what it can do. It's gotten a little bit better, but I still don't see it as a true object-oriented programming language. And if you're going to do anything more complex, I think it's going to limit your options. For example, on Blatek indicators, we do some of our optimizations with like memory and stuff, and you just can't do that in PineScript. There's just no way to do it. So what you're going to get is a whole bunch of stuff that lags, or it doesn't load up properly, or it takes a few seconds to load. Who wants that these days? So for me, I went down the road of learning Python, And it was great because I can do all of my statistical little counting algorithms in a blink of an eye. You know, if I want to see, like, for example, the other day I was watching the captain's live stream, and he was talking about this midnight retracement. So I was interested to see how that works on crude oil. Now, I think we have Edgeful doing that now, but they didn't have that report when I was trying to see how that will work on crude oil. And it's not a high probability setup on crude oil at all. So it's like, okay. And I used that. I used a little bit of Python code to just see how that would work. And, you know, it was just like very obvious that that's more of a, 40%, 34, 40, like it depends on the time of the year and the sample size. But that's been very helpful for me, just to learn Python, to just do the basic stuff, so you don't have to battle Excel all the time. Mark Loftus says, is there an Anchor VWAP for Ninja Trader? I'm pretty sure there is. I think Ninja actually has its own. If you go to the pencil rather than the actual right-click indicators in Ninja, the pencil has its own order flow, so you can actually anchor it to whatever you want. So you take it, and you literally, wherever you click, is going to anchor it from there. So yes, Ninja does have it, but it's not in the right-click indicators. It's in the little pencil that's on the toolbar. Servant Thought says, what exactly does your indicator tell us? All of my indicators that I use, like volume profile, TPO profile, average session ranges, average daily ranges, VWAP, all of them are just situational awareness tools. So they're not buy here, sell there. It's not like that. It's more, I always go back to how Hogue taught me, and it's a lens into the market state, right? And that lens is a combination of distribution curves, actual price action patterns, swing highs, swing lows, like something that is real time, something that you can kind of see happening right in front of you, rather than going, it's a lagging indicator, do or die, whether we have a range day or trending day, I'm still going to use VWAP as a blah, 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 it's like, you can't trade like that. Then you're going to be a very one-sided trader. And for intraday, that's not good. Intraday is a pinnacle of investing. It's like investing on speed. So any sort of inconsistency or inefficiency that you have as a trader, it's going to come back to bite you hard, right? So you need some kind of a tool to figure out if it's a trending day or a range-bound day. Now, for me, that's the TPO profile. We have potential for single prints, single-sided auction extensions of the first hour of trading range. How strong is that move? Are we continuing? Are we reversing? And then you have certain data points, like initial balance high, if you want to look for a continuation of that move, or a breakdown of that move. So, there are clear things that you can look at in real time. Now, people are always so obsessed with telling people how market profile is really complicated and it's really shit. But guys, it's like, it's not a 30-minute thing. We don't necessarily have to wait for a 30-minute time frame to finish to see that we've had a jump away. Like, for example, in equities, sometimes you get these huge jumps away from the initial balance. And it's obvious, it's obvious that it's a very big move away from the first hour of trading range. You don't need anything else to tell you that. Now, the next thing that you will be looking for is for that move to stay. Again, whether you look at a TPO profile or just a pure candlestick chart, it tells you exactly the same thing. But it's a real-time event when the initial balance high gets broken to one side, right? That's a real-time event. You don't need a 30-minute candle to tell you that. It's like... So I have a little bit of beef with people who are like, oh yeah, the market profile is shit. Yeah, it's because you're not using it correctly. It's like, bottom line, learn how to use it. But hey, that's just my opinion, All right. So yeah, the indicators that I use are all to do with price action, distribution curves, and they are there to tell me whether we have a normal day, whether we have an abnormal day, and then I am very familiar with the statistics of each day type, like how often they occur on my particular products. How likely is it that we're going to have a trend day? And for the most part, the answer to that is going to be not very likely, because true trending days where the market just keeps going and going and going, A, they need a catalyst. B, they need, a very specific set of conditions. And C, they become very obvious, right? You have single prints left on the TPO profile. You generally have very thin volume when those sort of moves are happening. Typically upside movement in equities is not done on super heavy volume, right? You can't have these zombie rallies where we just keep going and going and going. We might be doing that today, we'll see. But for now, it's all just looking like we are about to head into an abnormal day. We have now overshot the average daily range by 121%. So 21% over what the normal daily range should be. And it's just going. So like I said, 57.70 in ES is my next area of orientation. That's where average session range high is for London. If we don't turn around from there, this is definitely a trending day type. So we may have a pullback during the initial balance for New York, but I wouldn't expect that to hold. So I will be looking for pullbacks in order to get back in. That's, of course, if this trade doesn't quite get me enough profit that I'm looking for today. But I am going to try and stay in this Nikkei trade for as long as it's telling me to stay in it. Like for now, there's no reason to exit. In fact, on a 15-minute chart, it's just kind of popping above some EMAs. And then the next thing that I'm looking for is a break above the 37,290. Which would be around about the high of the day. So I want to see a new high of day, and then I want to see that hold. If that happens, I'm going to just, keep holding this until I see some signs of weakness, right? That is the premise. But for this particular move, because it's a swing move based on a weekly chart and the daily chart, I'm not going to be using 100 ticks, 3 minutes, 5 minutes, and then looking for the bands to kind of reverse in order to get me outside of a trade, because that's going to get me out of a trade too quickly. I am going to stay on a 15-minute chart for that purpose. For now, it's a range between the Asia high and London low, and we need to break out of that in order for this Nikkei to turn into a trending day as well. But we are holding above overnight VWAP. That is a bullish signal. So we'll see. All right, let's take some more questions. Servant Thought said, can you explain the relationship between open interest, positive and negative delta, gamma squeezes, and how institutional hedging creates supply and demand or support and resistance levels? Okay, so I'm probably not the person to ask that because to me, I kind of understand the premise of it, but I don't think I would be a very good person to explain that, because that is not my core expertise. Hogue is probably best for that because he understands all of those. Like, for example, I know what open interest is, but I haven't really watched positive and negative delta. Like, I don't really use it that much. I will use it towards the end of the day. And usually because Hogue tells me there's like, oh, negative delta and the guys are not getting what they want. So I'll be looking for, opportunity for some kind of a squeeze. So it's, again, working within the community. But am I an expert on those things? Absolutely not. Do I use gamma walls? Yes. Do I unequivocally know exactly the relationship between all of that? Absolutely not. And I wouldn't claim to, right? So I'm not the person to ask that. Use the, whenever Hogue does his group coaching, that's something to ask him to explain the relationship between all of those, right? He is the expert on that. He will be able to tell you a lot more about positive, negative delta, open interest. Hogue uses all of those tools to a great detail, like much more than I do, right? So again, I don't know everything. I am a technician and I know quite a bit, but I don't know everything. And I will always tell you that. I'm not going to sit here and pretend how, I'm some kind of an expert in options and stuff, because I'm not, right? So I'm going to tell you, I'm not the right person to ask that. I don't know, okay? But Hogue, absolutely. Michael Talley says, went to bed early last night, woke up early and did my first ever London Open with Dee from Kansas. Welcome, Michael. Very good to see you here. Thank you so much for coming to hang with us here during the London show. Very pleased to have you here. Noas? Is that how you read that? Hello, Dee. What strategy do you use for NKD trade? It's just like supply and demand levels and price action reversals to see whether we're hitting some relevant areas, and then I see where the option flows are, and I look for sort of 0 DT areas in SPX, which I then translate price-wise into NKD, and those become my areas of interest. So, but core of what I'm doing with Nikkei is just literally swing trading on supply and demand from larger time frames. So just looking for supplies. So we had a supply here that was established a while back. So I did a couple of shorts, like I did one short several days ago and then another one a couple of days ago, which brought me to some of the Express accounts that I've got now. And then it just decided to keep knocking on the door of the supply, which is never a good sign, right? The more time something gets tested, the more time we come back to it, and we keep coming back to it to assault it. That is usually a bullish sign. So I was looking for a break of the high, which I got yesterday. Wasn't in on that. I wasn't in on that. That was before I actually started looking at the markets, just before I go to bed. For now, I have been able to sleep through these. Probably because I'm not using a ton of risk. I think in some of my other accounts, because they're bigger, and I will be looking at like, a 15K loss if I wake up. So I think that was sort of playing on my mind and just going, oh God, if this turns on me overnight, I'm going to start the day with minus 15K. It's like, God, okay. But yeah, so these are smaller, the most risk that I'm using here is like $700 on any one trade. And if it doesn't work, it doesn't work. And then if I wake up and it's still there, it's like, oh, great. But because the risk is less, I think in my head, that's like an acceptable amount to lose. So I have been able to sleep through them. But yeah, it's basically just supply and demand. This particular trade, like I said, we had a weekly demand level that we turned away from. And then once the knocking on the daily supply was over, I looked for the break of that. Once I saw a pullback intra-day, which was during Asia. So it was on a 30-minute chart. So we broke through the high, which was somewhere around this area. And here is that pullback. So that's where I entered. And this is what you're seeing now. And I mean, we're still pushing. Like, there's nothing else for me to do here. Some people will overmanage this, but this is where the strength of Dee being able to hold trades for 1 million years comes into existence. It's like, this is why I can do like large risk reward trades, because I'm totally not bothered by any little wiggles and stuff. I'm looking at a 30-minute chart. It's still pushing. Now the next thing is this high of the day, whether we can actually get some commitment above that. So yeah, nothing super complex. Supply and demand generally has about 6 different things that you want to look at in order to qualify the zone as a good zone. You don't want to go into zones that only have like one single sell-off and then no follow-through. Those tend to be low-quality areas because they didn't have follow-through, right? And the price immediately meandered back up to the area to assault it yet again. So time wasn't spent long enough away from the level. That's also a bad sign. Whenever something comes back to a level very quickly, ideally, I don't want it. I'm like, no. But I only use that on larger time frames. When it comes to intraday trading, the lower the time frame, the less reliable the zones are, which is why we need some other things like, market profile, average session ranges, time of day, blah, 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 all of that. Because those zones are unreliable. The only time I would use a supply zone or a demand zone would be if it was made during the initial balance, and then through the course of the day we move away from it, and then for the last sort of hour or so we come back to it for power hour, and we cannot break through it. That is a particular playbook that I have, and I will do over and over again because I know that it's a high probability trade. So that's the time to run the supply and demand trade for power hour. But again, it doesn't happen every day. It's a very specific thing. Usually in power hour you would get some sort of a fade of the auctions, or even a late failed auction on ES. That happens a lot. So those are some of the playbooks that I prefer for power hour. Toshiba Tekra says, what about 2% change rule? Are you talking about not trading within the 2% of the price limit? Is that what we're talking about? If yes, the price limit on ES last time I checked was probably about 5% on the day. We're not even close to that, right? So if I look at where we are, yeah, we're only 125% on ES up on the day. So you have another whole, at least 3% of movement before you have to worry about trading within the 2% of the price limits for the CME exchange. And let's have a look at NQ. Same thing at NQ, exactly the same. So 1.6%. We have plenty of room. So you don't have to be worrying about that. This is not that much of a violent day to warrant you worrying about the 2% and stuff. It will be obvious, yeah? So when those moves happen, you can see them on the daily chart, you know, and on the 30-minute chart, they look like massive, huge spikes that are just horrendous, very scary. But yeah, you will be able to see those. You know, I have a tool on my other charting platform where I can just drag it from one end to another with a crosshair, and it shows me the percentage of move. So that does help. But yeah, don't worry about that. We're nowhere near it. When will we be in danger of trading within the 2% limit? So if we get all the way up to 58.73, that's already over 3%. I don't know whether it's 5 or 7%. Let me just check the CME price limits. And, you know, these will change. You know, they're not always the same either. Where are they? Equity indices, there it is. S&P. Hold on, let me try and look for that. Because the Granny D be blind. Where are we now? December, are we? Okay, so let's see. Here we go. They've looks like they've increased it actually. Interesting. Yeah, they've increased it. Yes, it is 7%, actually. It is 7%. And also they say price limit down only. So they don't currently have an upper price limit. So yeah, only if it falls 7% from the open, or like probably midnight open is what they're considering, which I'm guessing will be Chicago. Yeah, so they only have the limit down. They don't have the limit up. So if we're looking at longs, so far CME says it's all right. You can keep trading. So yeah, they don't have the limit up for now. So I mean, obviously that could change at any any point. But usually it changes like for the following day. And then if they decide that there's a bigger volatility, they will definitely be looking at increasing that. I think they have like 7, 13, 20%. So every time they reopen the exchange, they will actually expand that price limit as well. So something to take note of. But yeah, for now, I don't think you need to worry about the 2% rule. They don't even have it as the limit up. So that makes things a little easier, doesn't it? Yinshi says, are we going break even? I do not do break evens. I'm sorry, I don't. It's never worked for me over the last 17 years. Every time I'm looking at a swing trade in particular, and I'm looking at moves that have hours of movement in it. So it means that in order to get back to where I entered at 1:30 a.m. this morning, we're going to need like another 4 hours to get there. It's not always like that, obviously, but this is now an out-of-hours session for Nikkei, technically. I'm targeting a much larger area of a swing, which may not be reached today. Again, you probably joined a little bit later. But if you look at the weekly chart, I'm targeting the area as a one swing move, not today, but as an idea at 38,000. So that is my ultimate target for this particular swing trade. Now, how I'm going to play this, I'm going to keep it until some weakness is shown on the day. Then I will close it. For now, we're literally just starting the trend up. Like we haven't even made a dent in anything, really. Just looking at it. You know, we've just come above the 9 EMAs that I have as a sort of a trend tracking thing. We're above VWAP, and I do not do break-evens. The only time I will do break-evens if I'm doing a scalp during power hour and I'm not entirely sure of the scalp. This particular trade idea, I'm pretty damn sure of. So, you know, me messing around with... So here's the thing. What you do with break-even stops is to completely invalidate your initial area of what you were looking at, right? So I was looking at entry at 36.95 with a stop at 36.890. I was not looking at a stop at 36.965. And in fact, that's where the London low is located right now. The only way that I control what I'm doing is if I'm like this in multiple contracts and I get to a certain point where I will partial it. I will take some off. But I will never do a swing trade and put it on a break even. Never. I will keep my stops where they are. And if I want to partial it and protect the position, I will clip it in half or a third if I have enough profit in it, which has to be 3-to-1. If I have 3-to-1 risk reward, I can clip it and I'm in with enough contracts. I'll clip it by a third. Net, that gives me 0 risk without ever compromising the level that I was using. So that's why I don't like it. In all of our tests, whenever we make mechanical trading systems and somebody goes, let's do a break-even stop, it completely decimates the returns of the mechanical algorithm. Now, obviously, we're not mechanical. We're not like robots. We are human. So there is a lot more discretion and variation that you can use. But I personally have never, ever liked break-even stops. Never. Especially not for swings, you know. So therefore, I control my risk by partialing positions. Therefore, that's my way, right? Again, I'm only telling you what's worked for me. I'm not telling you, oh, this is definitely what you should be doing. But I'm just telling you that break-even stuff never worked for me. I'm usually right on the positions that I take on swings, especially. And for me to compromise the area by putting it to break even only to see it get tested. So example, exhibit A, right? I entered this at 1:30 a.m. It went away while I was asleep. This morning while I was getting ready and having my coffee, it came back to test it. If I had protected my position and put my position from 1:30 a.m. to break even, what would I have right now? 3 grand? No, I would have zilch because it would have taken me out. And yet, I'm still right on the move, right? Control your risk. Don't size up. This is only $700 of risk, right? This is not a lot of risk. So For me, break even, I have huge beef with, right? I hate it. I don't want it. I don't want to see it for my trading, right? You do you, but for me, I've never managed to make it work. Precisely because of this, right? Levels will get tested, especially if you're looking for multiple hours hold times. And I remember when I was first trading within the first couple of years, I also heard about the break-even thing, right? So I kept putting my stops to break even, and then I would get knocked out at the retest of the next session, and then I would see it go my way. And I wanted to pull my hair out. I absolutely hated that, because I'm like, you're right on direction, you didn't make money. It's like, it didn't even take me out. It's like, it never even got into the area that I was originally looking at as a starting point. So for my liking, putting stops to break even is absolutely a no, especially for multi-hour holds, right? And I told you that I'm targeting that 38,000 area, maybe not today, but as an overall swing idea, that is where I'm looking at a stopping point. So obviously there's going to be intraday swings and stuff. For now, we have strength. For now, we're knocking on the high of the day. For now, equities are all strong. That it's in line with what we've seen from the FOMC yesterday. I'm bullish on equities. For now, there's no need to overmanage. Nothing. So pause off the trigger. FX derivative trader says, hello Dee, live from France. What do you think of the NASDAQ after yesterday's news? Same thing that I've been talking about equities. It applies to NASDAQ. I'm bullish on equities. NASDAQ, I'm not trading actively right now, but it's arriving. It's already overshot, literally carbon copy of what we see in ES. It overshot the average daily range. It's going higher. It's coming into average session range for London. If that goes higher, this is going to be a trend day, so look for pullbacks in order to go into a long. This is what we expect from a big rate cut, because basically there will be more money flowing into the equities because there's more disposable income, so they're just trying to price all of that in. So more disposable income that the people have in lower interest rate environments, the more money they spend, the more money flows into businesses, which in fact turns into a bullish sentiment for equities. So hopefully that makes sense. That's a bit of macro, right? That's why we're looking at this. I'm a technician. I'm mainly a technical trader, but I do look at macro on about 30% of the days when we do have a catalyst such as a big FOMC interest rate cut. Sasa Land says, what is your thoughts? What are your thoughts on initial balance? I use it. I love it. It's a part of my trading. So yeah, it's how I orient myself and how I determine what sort of day we have, right? So, for example, let me just clear my throat, like frogs in the morning. Very Okay, so thoughts on initial balance. So if I'm looking for a range-bound day, the very first sign of a range-bound day would be the failure of the auction. So we get outside of the initial balance and we kind of start to show weakness around the initial balance edge, either high or low. If we then go on to create a neutral day type, extending the initial balance to both sides, to me, 9 times out of 10, or let's say 7 times out of 10, we're looking at a fade of the day. So if you can find some level to justify a fade from the other side, that's actually pretty good. However, at that point, if you're already back into the initial balance from the other end, maybe consider that that's not the best trading location and you're a bit late to the party for the neutral day fade. If we're going to have a trend day type, you want to see a one-sided auction. You do not want to see a double-sided auction because that slows everything down. And you want to ultimately see either a committed movement without creating too much structure at any particular price level. So you don't want to see like too many overlaps of the TPOs, so overlaps of 30-minute candles, like for example. If I have a look at ES and what we're doing now, we are basically just slightly overlapping, then popping higher, slight overlap, then popping higher. So for now, this is a moderately strong auction. It's not like the strongest auction, but it is moderately strong. It's going to just keep trickling higher. And don't get caught up in fading this. If it keeps doing that, any fades should be only the opportunity to get into a trade. One guideline that you can use are on trending days is where are the EMAs? Now here, I have 3 of them, just like to show me a very good trend. One of them is high close, low close, and and middle. And it just shows you how strong the trend is. So you can keep a pulse on how well the trend is doing using the EMAs. So this is why I like to say they are my timing tools. They're not tools for entry for me. They're just like, or are we quite far away? Do we like just shoot out of a cannon and we're kind of keeping up with the trend and the momentum, or are we kind of waning? And then once those start to cross over to the other side, that's when you need to be like, okay, this is probably either a chance for a pullback, or we might have a chance for a complete reversal. Depends on where that event is happening, right? So again, it will be a case-by-case basis, but it's a very good way to keep a pulse on how well the trend is doing. Some people like to use very low time frames, but depends on the type of the day that we have. So if I'm seeing, let's say, a breakout of the initial balance high, and I don't really have much of a catalyst news-wise, I would probably not be looking to hold something forever and ever. But if we do have a good catalyst and there's reasons for it, then I will be a little bit more aggressive with my holds, and I will be perfectly happy to withstand some drawdown before we kind of see whether it's really breaking down the trend or it's just a pullback. But that's kind of how I do things. But like I said, we're very different. Everyone's different. So for me, I'm happy to hold trades for 3 hours, 4 hours, 5 hours in some cases, and in other cases, 5 minutes, 10 minutes, like it depends on the setup and the playbook that we have. It really does. All right, let's take one more question and then finish it up. A couple more questions. Zoribon says, what is your risk percentage per account size? Okay, so on prop accounts, I don't quite look at it that way because it's not a personal risk capital, right? This is somewhere where you can actually size up. And the way I see it is 4% of the overall drawdown that they give you is the position size that I use. Now, I don't do 1 million trades per day. I will typically do between 1 and 5. And in fact, on some days, I will only do 2 or 3. On some days only 1, right? Depends on how much I plan to trade that day. I will size up accordingly. So sometimes if I only plan 1 trade, like for example, this Nikkei trade is probably an equivalent of 4 full lots in ES, because it is like 2 lots is 50 ticks per tick, $50 per tick, whereas in ES, you have $12.50 per contract per tick, so that would be an equivalent of 4 contracts. But this is probably the only trade that I'm going to do today. If I was going to do more, I will go down to 1 lot and then use about sort of 300, 350, maybe if I can limit risk, 170 to 220 per account, per trade. But I will be generally a lot more aggressive with positioning percentage rise than I am in my private accounts. On my private accounts, I will use like 0.3%. I will not even think of sizing up more than that. That whole nonsense about 1% per day on your private account, when that's pretty much your only working capital you're working with, that's nonsense, and it's very aggressive. It's not something you should be doing, especially if you plan to trade more than 1 trade per day. Because think about it, if you trade 5 trades per day and they don't go well, you're looking at it and you're using 1% per trade, or 2% per trade. You're looking at a 10% drawdown in 1 day. You're not going to last 10 days if you get yourself in a drawdown. And it happens, drawdowns can go on for months. They don't have to be like, oh yeah, I'm just a little bit off. Market states can change. You might be a momentum trader. We run out of momentum. Then what? Nothing. You're looking and crying over losing 220K. It's like, that you worked very hard for, and you're kind of like, yes, finally I can do it, and then you just do stupid things, and so you have to be a lot less aggressive with your personal capital. However, prompt accounts are there to be sized up on, to make mistakes on, to blow them up, to try again, to keep getting to more and more consistent, and eventually to keep trying to get to some more size in order to build the personal capital where you can be slightly less aggressive, right? But yeah, it's a very, very different game. So sizing up on prompt firms, very different to sizing up on your personal capital. Final question. Navas says, on Topstep, we can't hold overnight. So how would you manage if it doesn't reach the day or target? Would you re-enter somewhere? Yes. This is where intraday trading skills come in. Even though this is a swing trade on Nikkei, I would be looking to maybe re-enter upon a pullback, maybe another break of a high as well. That's break a high, pullback like I did today, and then another re-entry. I will look at gamma levels that we have for tomorrow. They will change day to day. SPX doesn't just always have the same gamma levels. The gamma flows and exposure changes day to day. So I will be looking for that to position myself for the next day. I will be looking at how the auction is doing as well intraday. I will be looking at, the volume profile. Have we built balance somewhere new? And can I use the edges of that balance for my new starting point? So this is where flexibility, but also systematic levels can actually help you make good trading decisions rather than just going in and going longer for VWAP, which I think is, it's a tool. Definitely going longer for VWAP is a tool, especially on equities. But it can't be the only thing you do, right? It doesn't really give you very good situational awareness, and it certainly doesn't give you an option to re-enter a swing trade. When I was a novice swing trader, I really struggled with re-entering swings. When I went into intraday, that was my main problem. Like sometimes crude oil will be doing what it does now, and I was put on an equities desk. And suddenly I would be like, well, all of the it moved away from my level. How the hell should I go in? And then I needed to work very hard to develop situational awareness intraday. This is where the profile came in. Volume profile was the first thing that they taught me. Then later on I met Hogue, and he put me onto market profile, which is a complete revelation yet again. I have average session and data ranges. Average session ranges is something I conceptualized out of a need to re-enter a trade. And I'm like, where the hell do I enter now? I don't know. And then I needed all these extra tools that would enable me more options to look at intraday movement as potential areas. But I had a big picture in mind. This is where I'm very, very good with analysis, because that's where I come from. I come from swing trading for 5 years. And then I went into intraday. So that's a lot of experience in staring at this stuff day after day for endless hours of end. But we all love it. I'm absolutely obsessed with trading. I think it's a puzzle every single day, incredibly intellectually stimulating to me. I don't even care about money or anything, but I do care about figuring out the day type correctly and getting that puzzle sorted out on the day. That's all I have for now. I'm going to leave you with that thought. I'm going to be on for Market Talking with Dee later on today at 1 p.m. Central. That is 7 p.m. London time if you're over on this side of the world. Until then, enjoy the main broadcast. Don't be a muppet. Today might be a challenging day, but we also may have very good chances of a good trending day, so don't try to fade this. I know some contrarians will be like, Dee, but you're also contrarian. Let's fade the move. Today would probably not be the day to fade this. If we keep getting single prints and just keep getting higher highs and very limited pullbacks, it is not the day to be a contrarian. So try and put that out of your head and try to go with the flow for once. Until 7 p.m. today, London time, I will see you guys very soon. Like I said, enjoy the broadcast. And let's trade the FOMC aftermath. Take care.